Welcome to Chat SDG, a groundbreaking talk show that aims to engage with the world's brightest innovators to unravel the potential of innovation in realizing sustainable development goals by 2030. In this thought provoking series, we delve deep into various sectors and explore how innovative solutions can drive sustainable change, addressing the critical global challenges and paving the way for a better future. Today, we have Shreeja Agrawal with us, a regulation and compliance nerd at Microfinance Industry Network or MFIN, and an SDG enthusiast. Hello, Shrija, how are you?
Hi, Bhuvan. I am very okay, and thank you for having me here. And yes, as you rightly introduced me as an SDG enthusiast, there could be no better introduction for me. And I'm very excited for this discussion today on the Sustainable Development Goals, which I think needs no introduction. So yes, thank you for having me.
On to exploring our curiosities, Srija, from your experience, tell us what is financial inclusion and why is it the need of the hour?
Sure. So, to begin with, let me just give you a brief introduction on financial inclusion, which, if simply put, means banking the unbanked. But if I deep dive into it, it is much more. Financial inclusion is, in fact, the process of ensuring access to financial services, timely and adequate credit for vulnerable groups such as the weaker sections and the low income groups at an affordable cost. Without access to adequate formal financial services, individuals would have to rely on either their limited resources or on expensive informal sources of finance to meet their needs. And hence, the role of financial inclusion becomes very crucial because access to formal finance can boost job creation, reduce vulnerability to economic shocks, and increase investments in human capital. And if we think about it at the macro level, greater financial inclusion can support sustainable and inclusive socio-economic growth for all. And because we are sitting here at Chat SDGs, it is noteworthy to state that at least 7 of the 17 SDGs view financial inclusion as a key enabler for achieving sustainable development. Financial inclusion is directly or indirectly related to eliminating extreme poverty, reducing hunger, promoting gender equality, promoting inclusive and sustainable industrialization, reducing income inequality, and so on and so forth. So the list goes on and on as to why financial inclusion is the need of the hour, but because of time constraints, I would refrain.
Srija, for such a detailed response. Our viewers are certainly going to benefit from it. Okay, jumping on to our next question. Srija, tell us, can you share some facts on data pertaining to those who are financially included and those who aren't?
There's a lot of data pertaining to financial inclusion, globally in developed economies, across developing economies, and country specific like that of India. So one of such crucial reports is the World Bank's FinDex survey of 2019-21, which states that globally, 24% of the adult human population are still unbanked, of which the percentage of unbanked women is 13%, while the percentage of unbanked men is 11%. Now, if I talk about India, in 2021, at least 17% of the adult population did not have an account ownership. And by account ownership, I mean ownership of an account at a regulated institution like a bank or a credit union or a microfinance institution or a post office or a mobile money service provider. So yeah, so that is the data. And if I break it down to the scenario of financial inclusion amongst Indian women, though the percentage of Indian women who have a bank or a savings account that they themselves use is 79%, but women's access to credit remains low even after awareness about microcredit has increased massively. Only 11% of Indian women have ever taken a microcredit loan as per the 5th National Family and Health Survey. But on the brighter side, the good news is between 2011 and 21, the gender gap in account ownership in developing economies like those of India has declined from 9 percentage points to 6 percentage points. In 2021, 74% of men and 68% of women in developing economies had a bank account. So there's still hope, and there will always be hope. So these are some of the data that will help us better to understand the scenario of financial inclusion, both globally and in India.
In addition to the market size that you've just shared with us, what are some of the key steps taken by the government and regulatory institutions like RBI towards banking the unbanked? Because this seems to be a very huge problem. The numbers that you just shared show that in some places we are almost 50 to 75% away from targeting all individuals.
Sure. I mean, for this question, I am really, really happy to mention that, and I really give credit to the government of India, which has been instrumental in providing financial inclusion through its flagship program, the Pradhan Mantri Jan Dhan Yojana, which of course needs no introduction. So, the Pradhan Mantri Jan Dhan Yojana actually envisages to provide universal access to banking facilities, financial literacy, access to credit insurance, and pension facilities. It is rather impressive to state that around 50 crore accounts were opened under this Yojana as on August 2023. So, yes, so that is one of the most crucial financial inclusion programs in our country. And of course, there are some other schemes also, like the Pradhan Mantri Mudra Yojana, the Suraksha Bima Yojana, Atal Pension Yojana, and all of these schemes promote financial inclusion initiatives in India and has been quite successful in doing so. Now, if I talk about regulators like the RBI created a new category of NBFCs, namely the NBFC MFIs, to promote financial inclusion as well as to promote women empowerment through it. Because this new category of NBFC MFIs caters exclusively to the low income households by providing microcredit and micro insurance products tailored as per their needs. Not only this, it also ensures that these NBFC MFIs build at least 75% of their total portfolio for microfinance lending only. It has also set guidelines focused on customer protection and responsible lending. So I really have to appreciate both the government and the regulators like the RBI for helping in financial inclusion initiatives and for promoting it. And of course, there would be a day in India where the entire population, the 10% population, will be banked on formal financial services. So, yeah, we're still waiting, but I don't think that it is a very far-fetched dream, to be very honest.
Hurrah, more power to you, your initiative, and all the partners who are helping evolve this ecosystem. Srija, you mentioned, a lot of digital aspects, digital and physical aspects of this banking. You have boots on ground, but you also have digital footprint. How does financial inclusion and digital inclusion go hand in hand?
So if I talk about digital inclusion and financial inclusion, I strongly believe that this is the future, because the use of digital channels such as the mobile banking and online financial platform play a very crucial role in extending financial services to remote and unserved areas where traditional brick and mortar infrastructure may be lacking. Not only this, it also provides cost-effective solutions, because you see, traditional banking services often involve high overhead costs, which makes them less accessible to low-income populations. But digital financial services can be more cost-effective, allowing financial institutions to reach a broader customer base. Also, digital transactions generate data that can be analyzed to understand the financial behavior of individuals and communities. And this data can in fact be used to tailor financial products and services to better meet the needs of the underserved. So, in these are some of the ways that makes digital inclusion and financial inclusion go hand in hand. And it is also important to mention that the ability to make digital payments using mobile devices enhances convenience, security, and not only promotes financial inclusion, but also promotes digital literacy. So it's like a win-win situation. So like I said in the beginning of this particular question, that digital inclusion and financial inclusion not only go hand in hand, but they are also the future. So yes.
Thank you, Shreeja, for discussing these issues on the podcast today. They play a critical role in building a more equitable, inclusive, and sustainable future for all individuals and communities around the world. Dear viewers, we invite you to join us in amplifying the impact of our latest work by sharing it with your friends, family, and networks. Every share brings us one step closer to building a more sustainable, equitable, and inclusive world for all of us. Until we meet again, this is Bhuvan from Chat SDG. Namaste.